Hello, everyone. Today on the final bar, my guest is Mary Ellen McGonagle, a name and a face probably familiar to many of you. She does a great job on StockCharts TV on her show and her show with Aaron Swellen as well. She's going to be giving us a preview of her market outlook presentation she'll be giving tomorrow on StockCharts TV with an interesting take on biotech and some historical lessons we can learn from it. We're also going to do a segment called Fishing for Alpha, where we look for ideas in this environment as tech starts to roll over. What is emerging in a position of strength? Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to the final bar. I'm your host, Dave Keller. I'm the chief market strategist here at StockCharts.com in a sweltering Redmond, Washington, as my former neighbors in the Boston area would say, a scotcha with some warmth here, but it's a beautiful, beautiful week. In terms of what is not heating up, it's technology, which is leading the way lower today. Ralph Acampora, his special just aired earlier in the day today on StockCharts TV. And in my conversation with him, we talked about the importance of rotation, of leadership rotation. And, starting to see that sort of condition, right? With a FANG trade rolling over, our 3-and-3 charts yesterday were focused on some of the FANG names that were coming off those overbought conditions, Amazon and Apple and others. Now you have a day like today with utilities, materials leading the way higher as the S&P finishes down about 1/3%. So we're going to focus on, again, trying to keep a long-term perspective. What are the signs we see in terms of breadth, in terms of leadership, what rotations, and help us make sense of the long-term trends, how they may be evolving. Now, coming up on our show and on StockCharts TV, we have some fantastic guests. I'm really excited to hear from Mary Ellen McGonagle and a little bit on this show today. On Saturday, we finish up this week called Charting the Second Half. All these fantastic presentations, Mary Ellen, Martin Pring, Tony Dwyer, many others giving their take on the second half of the year. You can go to our YouTube channel and see all of those presentations and what they're seeing, what they're thinking. But on Saturday, we'll be doing a live panel. I'll be moderating a discussion with 4 StockCharts experts, sort of digging into their process and doing some rapid fire lightning round questions at the end to get their take on what they see working for the next 6 months. Next week, we'll continue the energy on StockCharts TV. Behind the Charts is our interview style show, and John Markman will be joining us on Monday to share his process. He's a prolific author and writer. On Tuesday, Andrew Thrasher, and on Wednesday, Gary Dean from sentimenttiming.com will join us on the final bar. So a lot of really good guests. We're super fortunate on StockCharts to be able to draw from the expertise from a lot of different people and see what they're thinking here. Let's get to our market recap. We've talked about this, the S&P facing resistance. Today sort of felt certainly like a pullback from resistance of sorts. We've been bumping into this level from the early June highs, sort of bumped right back up to it, pulled back today. The S&P finished down about 1/3%. It came on strong around 3 p.m. And I was wondering if you just see this ridiculous rally. It sort of settled back into around 32.15. The mid-cap index, the small-cap index pushing further down. So while small-caps and mid-caps really exploded to the upside yesterday, you can see the small-cap index pulling back today down 2/3%. The NASDAQ 100 down 0.7%, and tech was the worst of the 11 sectors today, down over 1%. The VIX a little lower today. In terms of the rest of the markets, bonds really opened up pretty high. Gave back a little bit of that during the day, but still finished up about 0.5% higher. That pushes the 10-year yields down to around 61 basis points. And gold, which has been one of the charts we've talked about for long-term strength, really pulled back today, down 1%, which again, I hesitate to use words like, collapsed or really, dropped dramatically. Was a 1% move, which isn't that bad, but certainly relative to other things, it was certainly leading the way to the downside. Let's look at a chart of the S&P 500. What we've talked about in recent weeks has been this range-bound market. After the rally in May to settle into the first week in June, we've essentially been sideways, and now we're testing this resistance around 32.25, 32.30, and this is the peak from the early June rally. This then came back and we tested it again here around the same levels this week. And we've tested it a couple times. Each time the subsequent day has pulled back a little bit, and until we're able to break above those highs and push to further upside, show enough upside momentum, I have to expect that there's resistance there. If we do, though, I think that very clearly opens the way to 3,400, and I'll be the first to suggest that it's kind of what we're seeing. When Tony Dwyer was on the show earlier this week, it reminded me the number of bullish patterns we've seen, not just on individual stocks, but on the chart of the S&P. And I can't deny the fact that we had a bull flag around here in early May, which we talked about, and the measurement of that goes to around 3,600, 3,550, 3,600, depending on how you measure the flagpole, which is the rally going into that pattern. Certainly suggests minimum upside a lot higher than we are today. You also had this bull pennant, which, depending on how you measure that, takes us back to the previous high. So we've seen plenty of patterns along the way, consolidation patterns, which suggest further upside. But again, until we can push above the previous highs, above resistance, I think you have to wait and get that confirmation. So that's what I'm looking for now, is are we able to break out of this range? And if and when we pull back, we've got a lot of support around this area. These are the June lows as well as the 200-day moving average. In terms of sectors, as I mentioned earlier, XLU utilities was the only sector really up in a meaningful way, up 1.25%. Utilities are interesting because it's not a space that a lot of people have been nibbling in. I wouldn't expect because it's been pretty boring. It's been sort of the non-factor in these markets, as mega cap tech, consumer, others have been leading the way higher. But certainly today sort of chipped away to the upside, followed by materials, which has been up in the top before, communication services, consumer staples. And that ratio of consumer staples to consumer discretionary has been an interesting one. Based on what you saw today, staples up a little bit, discretionary down a little bit. That'll continue to favor staples. But taking the cap weight of Amazon out of that picture, that equal weighted ratio we look at, has certainly over the last 4 or 5 weeks been favoring staples. Energy back down to the downside after having a nice day yesterday as well. Looking at some individual themes, and we're going to get to some other things in a bit. When we talk about our segment Fishing for Alpha, we'll focus on screening, and we'll talk about stocks that are making new 13-week highs and just seeing what sort of names are bubbling up there. It's a lot of industrials, it's materials, it's a whole mishmash of things really across sectors that are showing that. But some of the stocks that are in there are the home builders, and you can see home construction was up over 2.5% today. This group has really rotated, sort of rallied into the June high, had much more of a clear base than the S&P 500 perhaps did, and now has resolved that to the upside with the home construction index breaking to new swing highs today, a new closing high for the rally as well. Apparel retailers also rotating up. This is rotating more from a beaten down level, but again, sort of in the top 10 of industries. And then fixed line telecom, this is sort of, you call it the boring part of communication services. This is sort of the old school Ma Bells like telephone, Verizon, those sorts of things up today, 1.33%. So those are the top 10 industries for today. On the downside, airlines, we saw airlines jump big today. They sort of came back to earth along with some REITs that had rallied and came off. Aerospace, so sort of the Boeings of the world coming off. Automobiles, this is Tesla Group, as long as the big Detroit automakers down 2% as well. But recreational services, which is within consumer discretionary, really the weakest of the sector. So a lot of the groups that rallied pretty good yesterday had those gaps higher, up 5-10%, kind of came back and gave some of those back today. One final observation looking at the dashboard is just how few of my global ETF list finished positive. Most of these lower. The only ETFs in the group that finished positive on the day: India up 0.7%, frontier markets, and Italy. Everything else was down. The things that led the way lower, really anything related to China. You can see the China ETFs down in a couple percent, depending on which basket you were looking at. Told you which way we were going there, but overall, again, most things down rather than up. And the U.S., one of the stronger markets relative to some of these other global markets around here. I just very quickly want to finish up looking at the Mindful Investor Live chart list. On Friday's show, we'll spend a little more time with this, kind of going through the details of how the week has evolved. But I did want to point out this chart on breadth and looking at the cumulative advanced decline lines. One of the things I've talked about is this breadth, I call it a breadth dispersion, or this differentiation in breadth with the large cap breadth looking most positive, the small cap breadth looking the most negative. After yesterday's rally, my comment was, I could see the breadth lines improving pretty dramatically with what we saw today. And I could see, again, you will see how this evolves. But I think what I would note if we finish about where we're at today is the small cap breadth no longer looking horribly negative. It's more consolidating along with mid cap, which is starting to actually break to a new swing high, and large cap actually testing a new high for the rally, actually going above the cumulative advance level for February. So these are actually starting to rotate a little more positive, and it's interesting because you've had technology rolling over, but other things are starting to overcompensate for that maybe a little bit, and actually rotating more positive. So actually breadth is improving a little bit, suggesting a rotation away from tech, but into other assets that are actually rallying just fine within the equity space. So kind of an interesting rotation to certainly be paying attention to as we go forward. And then the last thing I will point out, and then we'll take a quick break, is breadth. I've said for a while, until we have more than 50% of the S&P above their 200-day, it's hard to be very bullish. It's happened. And as of yesterday's close, over 51% of the S&P above the 200-day. So as promised, I have to assume based on that the market is in a continued position of strength. And as long as we remain above 50%, I have to feel more constructive than less constructive about the short-term trend in stocks. So it's interesting. We're seeing tech sell off, which has been what has provided a lot of the upside, and now we're seeing the breadth continue to improve. So we'll have to see how this week finishes off, and if we continue to hold in there in terms of breadth, might pull back a little bit with the sell-off today, and we'll see what tomorrow brings for sure. We need to take a quick commercial break. We'll be back with my guest, Mary Ellen McGonagle. We'll see you in a minute. Hello, everyone. Welcome back to the show. I'm Dave Keller here at StockCharts.com. Thanks for joining us on the Final Bar every weekday after the close. As a reminder, we'll do another Final Bar mailbag segment tomorrow. We'd love to hear from you. Any questions you have about charts, technical analysis, the markets, particular indicators, particular tickers, just let us know via email, thefinalbar@StockCharts.com, or on Twitter. Just tag us in any comment at FinalBarSCTV. Hopefully answer one of your questions on the air tomorrow. I want to welcome on my guest, Mary Ellen McGonagle. Mary Ellen is a familiar name and face, I'm sure, to many of you. She does so much on StockCharts TV with her show, as well as Wealthwise Women with Aaron Swenlin. And I've always appreciated, Mary Ellen, with your work. I think of you as a stock picker, and I always leave our conversations with a ticker or two kind of jotted down to dig into. So Thank you for coming on the show. I appreciate it.
Oh, thank you for having me.
So we were talking before we started just about Biotech. Biotech's a group that we've talked about on the show, and I know you have as well, just looking at this rotation back to the upside. But you're bringing more of a historical look at the space. What can we learn about looking at biotech over the longer period here?
Yeah, so what I'm doing here is focusing on historical precedent, taking a look at areas that have actually held in well or outperformed during the Great Recession out of that 08-09 period, as we are currently in a recessionary period. I always want to use history as my guide. So we can see going back here in this 08-09 period, the markets were down 37.5%. Take a look at how remarkably well this is IBB, the growthier names within biotech, and then I just highlighted some of the reasons. This was a period of great development and innovation among these bigger names, where they were coming out with cancer treatments and other treatments as well. And so, yes, we can see that generally speaking, this index fared quite well. And then also we are going into an election expecting a lot of bumpiness on the way, but historically, yet again, we can see that biotechs from that July into November period really performed quite well. If you look at the broader markets, particularly the 4-week period right before that November election, just a ton of bumpiness, and we can see that biotechs actually performed well going into that period. So that was my focus, and it's all about these innovative companies that are providing products that are being met with high demand. So in my mid-year review, I cover another very significant area that is seeing quite a bit of growth during this highly unprecedented period.
You know, it's such a great history lesson there, and I can see some similarities and a number of reasons why, you know, it could certainly mirror what we saw back there, 08, 09, 2010, and beyond. What, you know, it's funny, as you're talking, you know, William O'Neill's methodology, thinking about a catalyst for growth, I'm picking that up in your comments, which I think is spot on.
Absolutely. Oh, can we do one more thing before we move on?
Yeah,
And I
please.
just wanted to point out to you this really lengthy 5-year advance here. And this was all about gene sequencing and the development of that. And so in that period, in fact, this 5-year base, we had come out of, this 5-year uptrend, we had come out of a 5-year base. So the longer your base, the longer your breakout. This is a monthly price chart. Take a look here. We are currently emerging from a new 5-year base breakout, and I'll share with you this next chart. One of the primary drivers is, again, innovation. We are, of course, on the race to find a COVID-19 cure, but this particular stock is CRISPR, CRSP. We're looking at a weekly price chart. We can see that it has broken out of a nice 2-year base. And the company, I talked about gene sequencing. We are now entering a new innovative phase in biotechs. This is a gene editing company, and they can actually go in, change and edit an individual's gene composition so that they will reply or react more constructively to drugs. And they're treating right now sickle cell anemia with this super cutting edge new technology. And that's one of many things that's happening within biotech. Technology is helping them crunch data. FDA is being approved. I talk about all of those factors that are driving this area.
It's such a great chart, and I love the story and the way that that's set up, breaking out of a base, breaking to new highs. We have about 30 seconds left, Marielle, and I can't resist asking you one question if I could, because when I think of stocks and I'm looking at patterns, I think of you and how you might try to address something. You know, we've had this condition in the last, you know, week or so with this rotation away from some of the mega cap tech leadership names that I think we've all come to assume will just continue to go up in perpetuity. Now they start to roll over a bit. What's your take on a stock like Microsoft right about here? Are there certain levels or certain patterns that would cause you to lean away from these, or what's your take on these here?
As you know, or maybe you don't, I have an MEM Edge report that goes out twice a week, but then I do a midweek if there's anything of note. And what I am noticing within some of these stocks, they are all finding, for the most part, I traffic in these high growth names, a lot of the FANG stocks, they're finding support at their upward trending 21-day moving averages. So you'll see them undercut, but for the most part, I am finding support. There were select stocks that I actually view as keeping an eye on, because historically, Facebook, you can go through any number of names, Microsoft, that finding and continued finding of support is constructive. So we'll keep an eye on that.
Perfect. Mary Ellen, it's so good to have you on the show. And I know your special market outlook event is coming up tomorrow on StockCharts TV, tomorrow, 10 a.m. Eastern. So I encourage people to check it out. Thanks for coming on the show, Mary Ellen. Be well, and we'll talk to you again soon, okay?
Sounds great, Dave. Thanks a lot.
It's Mary Ellen McGonagle. Mary does such a great job with Mary Ellen with her shows. She has the MEM Edge, which is on Friday afternoons on StockCharts TV. She also hosts Wealth-Wise Women with Aaron Swenlin on Thursday afternoons. And her special market outlook presentation as part of this Charting the Second Half week that we've prepared for you is coming up tomorrow morning, 10 a.m. Eastern. So check it out there for sure. We need to get to our next segment, which is called Fishing for Alpha. What this does is provide us an opportunity to dig back into the scanning engine and look for opportunities. You know, one of the things I've learned from my time, working with portfolio managers, institutional money managers, is I learned for bottom-up stock picking, there are always opportunities. And talking with Mary Ellen, thinking of William O'Neill's methodology, the can slim model, if you open up the newspaper, if you open up Investors Business Daily, there are always a lot of charts that look pretty similar because there are stocks always breaking out. There are very few times when nothing's breaking out or nothing's breaking down. So having a good discipline of going through your screens, looking for opportunities, can be really, really helpful, especially as an equity investor, as a stock picker. If you're not doing that, you're missing out on potential opportunities. It's the missing out. I think that's the biggest pain point for people. So what we're going to do is look at the scanning engine. And again, we don't have time to get too deep into the mechanics of the scanning engine. If you're not familiar with it, check out on our YouTube channel. Our founder, Chip Anderson, has recorded his show called The Deep Dive. He's recorded some specials particularly focused on the scanning engine, shows you how to do it. Also, our Chart School pages, our help pages, have a lot of information about how to set up and manage your scans. But one of the scans I refer to pretty regularly is just a simple scan looking for S&P stocks making new 13-week highs. And I would never just say, run that scan and buy whatever comes out or something like that, make some conclusion based on what's on there. It is a chance to dig deeper. And I think this helps you decide what charts you should be looking at. It doesn't tell you on its own what to do with those charts. It tells you what to dig into. So having run that, I ran this just earlier. This is an intraday update, and I came up with 55 stocks that were making a new 13-week high. And so these are stocks that some of them fairly extended. So we'll see stocks that have been in pretty extended uptrends. You'll also see things that are just rotating and breaking above bases, some things that have been beaten down and are just starting to rotate higher. It's sort of a mixed bag. And so for me, what I usually do is dump these right into a chart list and just start going through the charts and see what patterns we can identify. 55 names is a little much for us to get through. We'll try to get through as many as we can in the limited time, but I hope you create a scan like this and see the results for yourself. So it literally just has one main input. It's basically saying, I want things where today's close is greater than yesterday's max close for the last 65 days. And the group is the S&P 500. You can customize that based on whatever settings or whatever universe you want to look through. Also helpful to run on ETFs, by the way. Here's what the results look like. Now, Charter Communications, the first one, I have them sorted by sector. So we'll start with communication services and go from there. We talked about Charter on Monday, I want to say, because as part of my normal process going through the S&P, this has just come out as a basing pattern and hitting resistance. What's interesting, in the last couple of days, it's actually broken above resistance, broken to a new all-time high here, and a nice 13-week high plus, with the relative strength starting to turn higher. So relative strength had been rolling over, actually starting to rotate higher. It's up 1% today. So actually an interesting basing pattern stock breaking to the upside. Borg Warner, not quite doing it. It's back actually above the 200-day moving average, but now I'm looking at resistance around 38. I'd love to see it break above that. It is making new relative high for the last 6 months, which is why it's really a great chart in my opinion. Overall, I think it's setting up pretty favorably. What's good here is you have the potential for a breakout, the downside risk maybe to the 200-day moving average to 32 below that, which would be the June low, but overall potentially setting up for further upside. You may be looking at the RSI and say, well, hold on, is this a divergence because the RSI is lower? And so the short answer is not yet. What happens a lot of times is visually we will see a pattern like this, even if the stock goes up a little bit, and we'll say, hold on, it's a divergence because the price has gone up, but there's less momentum. But remember, during the move, you can't prematurely say that was the top and that was the top in the RSI. You have to wait for some sort of pullback to really confirm whether or not that's a divergence. We haven't had it yet. It's actually still just a chart moving higher, which is kind of what we want. A number of other stocks within consumer discretionary, so we'll whip through these fairly quickly. We actually talked about Whirlpool, I want to say, right? I definitely remember jotting it down on last weekend's review, but broke above this week the swing high from June, making a new closing high today and yesterday as well. A number of home builders on here. I mentioned in the recap how home builders were one of the top groups today. If you look, Pulte Homes pops up, making a new swing high. And again, this is looking at closing prices. So you see it's below on an intraday basis, but on a closing basis, that's what it's looking for. It's actually broken to a new closing high today and getting back above the 200-day moving average, which is kind of interesting. DR Horton, ticker DHI, even better. This is actually testing a new 12-month relative high and also a new price high. It just broke above 62, which is the peak from February. So that group has really come on nicely, rallied near the high, sort of has spent the last 6 weeks stabilizing and now starting to rotate back to the upside. So I think the group is actually setting up pretty well. Lennar actually looks pretty similar. Home Depot has pulled back just a little bit, but overall testing those previous highs. It's well above its February high. So maybe not as actionable as some of the home builders. Lowe's actually just becoming overbought. It's been in a pretty consistent run to the upside, a nice relative performer, but the fact that it's overbought starts to put it on my list of, hold on a minute, let's see how things actually play out. Garmin, not quite overbought. You can see it's breaking above this resistance level. So it looks a little bit more like the home builders that are setting up kind of favorably. Tractor Supply Company has been in just a slow and steady uptrend. Look at how it first became overbought back here in May, and you can see how it just has remained overbought. And that's when things become overbought and people immediately say, okay, that's too much. I need to, I want to, take profits or sell or something. I always want to point out charts like this. Remember, just because something becomes overbought doesn't mean it can't remain overbought for an extended period of time, especially if the uptrend is just consistent and consistently strong. So this is a stock that's continued to make new highs, continue to make new relative highs. So until that trend changes, the uptrend is in place. Higher highs and higher lows is kind of what we're looking for. Now we get into some really interesting charts. This is within staples. And what's interesting is I think we've focused a lot on consumer discretionary because that's where the better charts have been. But look at some of the charts in staples that are actually breaking to new 13-week highs. Kraft Heinz comes to mind, KHC. McCormick, MKC is another one just this week making a new 13-week high. Colgate-Palmolive is still trying to break above this basing pattern, but a new closing high for the last 13 weeks. We do have some stocks within financials. We're going to go through them very quickly just because we don't have a ton of time for them. It doesn't tend to be names that unless you're really familiar with the financial sector, except for a couple names like Morgan Stanley. This was one of our mindful 6 that we talked about. I made a note as I was looking through the results to revisit that basket of 6 names because you can see Morgan Stanley's actually broken above its June high, which is actually a really interesting pattern. NASDAQ OMX has actually gone to a new swing high this week as well. Making a new relative high to the upside. We don't have time to go through any more of these. I wish we could, but I would encourage you to run this type of screen. Again, not that you would just blindly buy or sell anything on this list, but use it as an opportunity to look through the charts, see which ones are actionable, maybe earlier on in a breakout, see which ones have based and are just starting to break to new swing highs. Those are the names I would start to look for opportunities, especially ones that are starting to outperform given the mega cap techs pulling back. That leaves a vacuum for new leadership. We need to wrap the show. Go to 3 charts in 3 minutes. We call it the 3 and 3. So here we go. Chart number 1 is what I call new Dow theory. And traditional Dow theory looks at Dow Industrials and the Dow Transports. And it looks at those 2 indexes and whether or not they confirm one another. I use what I call the new Dow theory, which is using the S&P 500 as one piece and the NASDAQ composite as the other. So the S&P essentially represents traditional industry and services. The bottom is really focused on technology and respecting that overweight in our economy. So the NASDAQ clearly has been breaking to new highs. On a closing basis, the S&P needs to get above that high from the end of June, which means you really want to see 3250. If it does, that is a bullish confirmation suggesting further upside. If we fail here, this is all of a sudden a non-confirmation with the NASDAQ going higher and the S&P not confirming that yet. That's sort of what we noticed back here in June, which is what put this, I think this is the first time we probably looked at it. So, again, it'd be interesting to see if the S&P is able to eclipse previous support from early June or not. Now, when you talk about traditional Dow theory, you're looking at the Dow Industrials and the Dow Transports. And here we're looking at the Transportation Index because it's actually rallied a pretty good deal. Airlines were down today, but transports includes a number of other groups along with the airlines. It's actually entering this resistance range. It's just back above its 200-day, which it's been below for about 6 weeks or so. It'll be interesting to see if it's able to hold the 200-day. It was not able to do that at the beginning of June, and a break above 10,000 would be a key improvement in that index after a long period of underperforming the S&P 500. Finally, as I promised, for many, many weeks, if and when we see over 50% of the S&P above the 200-day, it's hard for me to be too negative, and I think that's where we have now arrived. So it's hard for me to be too negative. I do think pullbacks will happen. I think we may be in one of those rotation periods where we'll see some swings down depending on what leads and what lags. But overall, if we're able to remain above 50% of S&P stocks above their 200-day, I have to assume the trend is more positive than negative. Folks, that's our show for today. Thank you so much for joining us. Special thanks to my guest, Mary Ellen McGonagle, for joining us on the show. Her special is tomorrow morning at 10 a.m. on StockCharts TV. Also, as a reminder, we'll do a mailbag segment tomorrow, the final bar at StockCharts.com to email us. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a good night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.